Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday market webcast. All right, daily chart. Look, this is the daily mid-band. We're going to go back to some very basic stuff that we've been teaching about, the S&P for over a decade. It likes the Bollinger Bands: upper band, middle band, lower band, middle band, upper band. Okay. Whether it's commodities, stocks, whatever it is you're looking at, if something wants to trade between the middle band, the green line, and the upper band almost exclusively, it is an uptrending market, certainly over the intermediate term, and at your own peril, you can fade it in the short term. Not advisable at all. Conversely, if it wants to trade between the middle band and the lower band exclusively, it's a downtrending market. We saw a lot of that 2020, a little bit in 21 and 22. That is primarily sell rallies. This is buy dips, okay? As and what we see now is something called an upper band ride. So talking this week, I've been ridiculously busy, so I've only done a couple of webcasts this week. There's narrowing ranges around the 9-day and the 20 days. Consolidating, upward grind into CPI, upper band ride, and now the bears have lost any short-term tape control at all. And yes, 4600's open. So you can sit there like Chicken Little and scream about, this is a bear market rally. This is it. We have to come in. It's too far, too fast. It's all this other stuff. And the whole time you're just throwing shorts at it, losing money, when it's a heck of a lot easier to go in the direction of the trend, buy some of these dips, wait for something to actually break, and short it then. Much easier way to live your life. So why are we in the predicament that we're in? Well, it all started on Monday. So Monday comes, and they print a lower low versus Thursday, which was pretty impressive. So this was jobs, lower low here, and this was, 2 a.m., 3 a.m. Europe open, whatever. It's a 24-hour existence. This is your daily mid-band. You've taken it out by 20 handles. Except then you gave it up, bears. You gave it up into the open, then you tested it in the light of day, and then you blew it. And it's just been nothing but higher highs ever since. So last night, right here in the 3 a.m. hour, Europe open, when they bounced it, they went ahead and, I think the Globex low is like 34 and change. This was the first time we had engaged the hourly mid-band since Tuesday. So again, I go back to my original point. You can just accept the fact that the market feels like going up right now, or you can play contrarian and throw contracts and add to losers and roll out shitty options and do all kinds of crap until your account is not an account anymore because it needs to have money in it. And you get moves like this because you get so many people fighting it. You get a lot of low, these are hourly candles. So, look at the low volume, or not the low volume, but the low range rather. Drip, 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 drip to the upside. It gives you every opportunity to think this is the one that's going to go in, pile in, new highs, rinse and repeat over and over and over again. And then you look down and you're like, whoa. We were testing 4,400 almost on Monday, and now we're sitting up here printing 45.53 quarter. How did that happen? You blew the lower low, you blew the 20-day, you blew the 9-day, and then you never look back. Then it's all aboard. Then people start chasing to the upside. So, on the daily chart, are we oversold? Are we parabolic? Does it have to come in? No. Shit. We consolidated for a couple of months here, and it's been a pretty steady glide, and you just went back to test the middle band, which is your short-term, median area. Test it, See if it wants to hold and go up. So it's not like we are straight up, we've blown out the third standard deviation band, which is the gray line, and oh, it's crazy town and it's got to do this. No, it doesn't. Sorry. It really doesn't. So what do the bears need to do to bring it in? Well, for starters, you could turn the hourly mid-band into resistance. That's actually tradable if you can get that done. Do you want to be shorting it between? Do you want to be shorting it above the hourly mid-band? No, and I mean not at all. I've tried a couple of them this week. They've been losers. And if that's all you've been doing this week is fading, then all you've been doing is losing. Unless you're like scalping a handle and patting yourself on the back. That's great. Would you like fries with that? So until the blue line becomes resistance, you're looking to buy dips. If you're a super long-term trader, you got to deal with the green line again. But if you're a super long-term trader or a super intermediate-term trader or position trader that isn't some kind of swing short genius, then you've probably been long since back here. That's not really my style, but it should be. It would be if that was what I did, because this is where they blew it. Here, confirming it here, and really screwing up here. That's the 9-day as the blue line and the 20-day. So I'm on here this morning just to basically say, look, if you have been getting hammered trying to fade this thing, you have to wait till there's something to actually fade that's going to run a decent amount of handles. And I think that is when and if it can get back below the hourly midband. It keeps winning all these little squeezes. So if Friday Happy Fun Time is in the cards today, you can really get dragged behind the bus going to the upside. So we've got that hourly midband is sitting at 45.41. You got volume weighted average price 45.43, proprietary moving average 45.46. Yes, eventually it will come in. But why do you have to anticipate it coming in? Short it after it comes in, because there'll be plenty of time and plenty of handles to the downside. Just like there's been plenty of time and plenty of handles. Shoot, if you're like, I'm not trading that, I don't trust it, don't blame you. You're still below the 9-day. Well, I don't know. Okay. You know what? It's breaking out here. Everybody's going to the party. I want to go to the party too. All right, fine. So come to the party. Say you get in low this candle's hourly candle's 44.82. Let's say you fucked around for 10 handles and you're in at 44.92. We're trading 45.53, champ. There is plenty of time and plenty of handles to get involved without trying to anticipate tops and bottoms in a tape that has been way too not volatile to really give up good tops and bottoms. You are trying to bang a square peg into a round hole, and you are going to blow yourself up doing it. So stop it. All right, that's my ray of sunshine for a Friday. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I'll talk to you Monday. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.